So today we saw mortgage rates go up. Well, we saw the Dow Jones and all the equity markets go up as well. So what actually happened today? Well, over the weekend, we had some great progress on the China trade with the tariffs. That's basically what's catapulting all this. But the one piece of the puzzle I missed a little bit is I thought the tariff revenue that came in last month for $16 billion in tariff money, it's helping the deficit, but I thought it would help mortgage rates a little bit more. So a little bit confused. Let's get over and see what happened today and my thoughts on the markets. So my name is Dan Frio. I do this report actually 2 times a day to inform you guys of what's going on with these things over here. And the reason I do this is I want you to understand the whys behind it. Okay, so in today's market, we saw mortgage rates inch up a little bit. There was a big gap in bonds, but the news is right through here. Our government went over and kind of made some agreements with China over the weekend, and the news is fantastic. Okay, there's a pause on some tariffs. There is a minimum tariff put into place, and there's future negotiations coming. So now the door's open, and now that's meaning there's a little bit of relief on the horizon. So that's what we're seeing right through here. So that's what caused basically the equity markets to go up 1,000 points. But then when we come over here, I'm like, okay, this tariff revenue is really going to help. And you can see in April, tariff revenue brought in $16 billion. Okay, that's going to go straight toward the deficit. So you're thinking, okay, the lower the deficit that we're going to have, that means less bonds in the market, and that should be a good news for interest rates. Well, what's happening right now most likely are people just pulling their money out of everything and just jumping into the stock market. Even the president told us last week,